Hello, and welcome to another edition of Behind the Numbers, the podcast that seeks the personalities in the finance and technology industry. So, before I jump in and talk to our very special guest today, I'd like to remind you that today's podcast is brought to you by Kinetic Core AI. They're a company that help organizations grow their revenue within 12 months. So, you're interested in a free growth consultancy, throw the word grow into the DMs, and we'll take it from there. So, I would say it's quite a privilege today to have Jason Oakley on the call, a boy from the Black Country, done well. He is a grandee of the financial services industry. It's really difficult in 30 seconds introduction to really press home the experience that this gentleman has, but he is currently CEO of Afin Bank, who are making waves in the financial service industry by serving underserved populations of that market. That accounts for about 20%, right? And it's a clever play. It's smart because, as the demographic of the UK changes, so does the requirements on people accessing financial services. If I touch on just one big point in the in his CV, was a big player in Metro Bank, which, if you recall, was one of the first banks on the high street for 100 years, should I say, and made a significant increase to their loan book over a course of the years. I'm sure Jason will dive into a bit more detail on that. But Jason, like I said, it's a privilege to have you today. I'm really looking forward to diving deeper into your experience, your background, and just generally the insights on the financial service industry today.
Well, I'm delighted to be here, Matt. I really appreciate the invite and looking forward to our chat.
Awesome. So as I said, really difficult to try and compress your career into a 30-second intro, but give us a sense of it for us. Where you've come from, the types of organizations you've worked at, and noticed as well you've set a number up, right? And I don't think there's many people that can say they've set up banks or they've set up financial institutions, right? So give us a sense of that, and then any of the sort of big moments that you want to call out.
Yeah, well, it's interesting because as a youngster, I was washing and sweeping hair 20 hours a week as a 13-year-old. We weren't particularly well off, but it was a great environment, very stimulating and helped me along the way. I suppose as a new entrant into the banking industry, I joined the banking industry in 1985, and you kind of soberingly a long time ago. But there was always an ambition and a drive. I'd got a place at uni. I decided that wasn't the right choice for me because I wanted to start earning money. So I went straight in. I actually started at TSB all those years ago. So there was always an ambition and a drive. And really for the first 20 years, I followed a very orthodox. I was lucky, I was driven and I worked incredibly hard. I went to the Royal Bank of Scotland group where, frankly, which Edinburgh or Glaswegian school mattered more than other things. So you were always fighting against various headwinds, shall we say. But I was really lucky. By 33, I was one of 200 of the executives across 140,000 people. I was responsible for SME banking for both the RBS and NatWest, which was a really big business, over 1.1 million customers, with a market leader in the UK. So I had the most incredible career opportunities in Royal Bank, and it grew from a small regional bank into the biggest balance sheet in the world at one point before the financial crash, and then the wheels well and truly fell off. So it was very orthodox. As part of that financial discourse and dislocation, in February, the dates now, but February 2007, I left Royal Bank of Scotland, and I went to work for Closeberry Merchant Bank, and I had a really fantastic experience. But one of the things when I left the bank, and I was there almost 20 years, was I need to control my own destiny. I don't just want to be a normal orthodox banker. Clearly, that was part of my career path, and I wanted to continue that. But it really made me think. I was 40 years old and I was redundant and not working for 10 days. But even that really freaked me out. I didn't like not being in control. So at that point, I decided to start building my own enterprises, my own value, independently of what I was doing, working for a merchant bank, a retail bank, wherever it might have been. So my wife and I set up a financial advisory business where I was working at Close as a contractor. So I was just routing the earnings into that business to set it all up. And I'm delighted to say that business is really successful now. It's been going 17, 18 years. And my wife's done an incredible job. And that business is not just an insurance broker, it's a mortgage broker, commercial finance broker, and an IFA and wealth management business. She's done remarkably well. But it kind of gave me a bit of a taste, a bit of an ambition. So subsequently, I've invested in 25 different businesses along the way.
Okay.
Some of them I've helped to found from scratch. Some of them I've just been an investor. One, by the way, is don't be a passive investor. Most of my passive investments haven't made me any money.
Yeah.
Ones where I've been directly involved, we've done rather better. But we've got an eclectic mix. I've successfully invested and exited from a funeral business. We have a big asset management business in Manchester where we manage 3,500 properties. I've invested in an asset finance business where I was chairman. So all sorts of things. I think what have I learned from all of that, which probably makes me a slightly unusual banker, is that I know how hard it is to set up a business. I know how hard it is to run payroll. I know how hard it is to, spin many, many plates at the same time, and the pressure points and the issues. Building an enterprise from scratch is an incredibly difficult enterprise. And also 70 to 80% fail in the first 3 years.
Yep.
You almost need to have a little bit of your resilience has to be off the scale to be an entrepreneur, because there's so many things that knock you back. So I've got great admiration. I think for the last, I was one of the co-founders of a business called Mantra Capital that actually did really well, and we sold it. Eventually the business was sold. But the last 10 years, 10, 12 years, I've set up 2 further new banks. I was part of the team. I didn't really set up Metro. I was the managing director of commercial banking and mortgages, and I built the lending book to several £billion while I was there, ahead of the London Stock Exchange float of the business. But the last 2 banks recognised as an SME bank that's now profitable. For a very, very short moment in time, I was 100% shareholder. Not for long, sadly, because as the capital came in, I was getting significantly diluted. But
Yeah.
I'm still the 4th biggest shareholder and recognised, and I'm very proud of what they've achieved. But Afin is really my baby now, and it's such a wonderful proposition, and we feel so proud of our purpose, and we're starting to make real traction. But I think the thing for me is 41 years I've learned to really respect new enterprises and probably more empathetic and understanding. I'm not a typical banker that's slightly, without being disrespectful, slightly aloof and detached from what's going on in the real
Yep.
world. I kind of understand it. I get it. And I think that helps. It helps how I work with our distribution channel, our brokers, and our
Yep.
key counterparts.
Brilliant. Thank you for that. And sounds like you're bringing a fresh approach into financial banking. So I'd like to take you back a little bit, if you wouldn't mind, and just touch on the RBS days, right? Because it resonates with me. Because when I started out in my career in financial services, obviously you touched on it. RBS had the biggest balance sheet in the world. I remember like the likes of Fred Godwin would get up on their announcement presenting how we made record profits again this year, and everything was really, really good. So you were part of that journey, and then things went sour during the financial crisis. So what I'd like to understand really from your perspective, what did you learn during that period that you're now implementing? So the good things, because you were part of some epic growth during that period, but then equally some of the other behaviors and some of the other things that were going on, which you now sort of look away from and say, I can implement a more robust and better control environment today.
Well, I think it was the most wonderful learning experience, and I was very fortunate to get the opportunities that I did. I think the Royal Bank alumni still is very powerful. I go to events, and my old ex-colleagues across the alumni still very, very influential in the industry. It was a golden time for Royal Bank. It genuinely was. There was such a lot of excellent people all at the same time. I have no idea what it's like today because, it was a long, long time ago after
Yeah.
I left. But interestingly, Paul Thwaite, I used to work with, Paul's the group CEO now, and he was head of business marketing when I was head of business banking. So, I knew Paul reasonably well. And I think by all accounts, NatWest Group is doing really much better now. But I suppose, what did I see that, I think there's a risk when you get success that you start to detach from reality a little bit. Humility is such a critical thing, both with your colleagues, but also, there were some exceptionally talented people, but I think they were just a little bit deal junkies. They just had to keep doing more and more deals. And, eventually the wheels fall off. There were deals in the latter phase that probably were not value enhancing and, left IBM AMRO left the bank horribly exposed as soon as the financial crisis hit. And actually the core business of the bank was still very, very robust. It's intrinsic business, but it was the Greenwich Capital, CDOs, some of those more kind of exotic
Hmm.
positions. So I suppose one of the things is that, you know, I certainly veer to organic growth rather than acquisitive growth. I prefer to grow naturally through our distribution channels rather than trying to find a quick win on an acquisition because cultural alignment and all those sort of issues. In fairness, in Metro, I bought an invoice finance business, an asset finance business, and they both performed very well. That those are key parts of Metro Bank's SME and commercial proposition. So never say never, but I think humility, staying close to colleagues, not letting the whole kind of ego trip take over. I think if anything, I left in '07 and the wheels didn't fall off till August '08. So I left actually when the share price hit an all-time high. So I wasn't there when, things really got bad. It went down to 10p. So I didn't see the worst of it. We were still, Royal Bank Group was still in decent shape when I left. But you could see things were starting to So, but Fred Goodwin actually was an incredibly talented man. George
Yeah.
Mathewson before him, Benny Higgins, who ran the retail. These were really great quality people. But you can't walk on water. It doesn't matter who you are. So, you have to learn. And maybe we didn't learn quick enough and things happened.
No, absolutely. An interesting period of history, I guess, is financially, and I think there are still ramifications still with us today from that period, right?
They definitely are, and it's good to see because a lot of good people left the group, make no mistake, but there's still an awful lot of good people there, and I'm in contact with a number of them, and it's great to see NatWest Group, delivering a much better performance, making money again, and it's good for the industry, it's good for the banking industry that they continue to do well. So I'm genuinely delighted to see them doing well.
Brilliant. Very good. Right. So just talk us through Afin then. What was the origins of it? What was the hypothesis? Where did the idea come from? What are you looking to target? Yeah, tell us a bit about the vision all around Afin.
Well, one of the things, firstly, is over the years, Matt, I've had experience with different sorts of shareholders, and they haven't all been positive. I couldn't describe a more positive relationship with our parent, which is Waika Re, which is an African reinsurer. So very unusually, it's what I would almost call reverse inward investment because the money's coming from Africa to the UK rather than the traditional route out
Hmm.
UK overseas investment.
Yeah.
And we have a blue chip reinsurer that actually has established itself. It's very profitable, very successful reinsurer based in Africa, and has really established itself over the last 15 years. It took in 2011. So it's a wonderful success story. They made $40 million last year. Great success story. But more importantly than that is the cultural fit. There is a genuine respect. Their strategy, they set out, they wanted a counter cyclical balance to the reinsurance business. A bank And let's face it, no matter how dynamic you are and how fast you're growing, a bank's a utility. It's a pretty steady earner. Yes, there are cyclical times when property prices drop, economic growth drops, and things change, but it's a pretty stable earning stream across the cycles. And they wanted that to kind of balance it out. I knew virtually nothing about the diaspora. I'd worked in Holland when I was CEO of Hanco, which was an ITM business within the World Bank. So I'd had I'd a little bit of overseas exposure, but certainly not Africa. You know, our parent is headquartered in Sierra Leone in Freetown and has a big hub in Ghana. But then right across Africa, it's Kenya, Zimbabwe, you name it, right? And then Dubai. It's a really interesting business. So what attracted me, which is what always attracts me, is intellectual stimulus. I need a new challenge. I need to create value. I love the customer driven nature of how do we unlock potential? How do we give customers better value? And the thing that genuinely shocked me was if you look at the African diaspora, which is where we started, 1.5 million people in the UK with a right to work here and live here, but not a UK passport. Their educational qualifications were far in excess of the average in the UK, typically bachelor's or master's. Their earnings stream was above the average, but their home ownership was 1/3. It was just a complete anomaly. How could this be? And then when you look at the broader diaspora, where you include Europeans and all the other ethnicities, Indian, Polish, there's so many different ethnicities in the UK, it's about 9.6 million. So one of the first things we look to address is why aren't people getting home ownership? So that African diaspora, 1.1 million rent out of 1.5 million, and it didn't make any sense. And if I'm honest, yes, they were non-standard because they didn't have a UK passport, so the money laundering on board it was a little bit more complex, but not impossible. So we just saw something kind of wrong with the system, that these people were effectively financially excluded. They were not being given the opportunity to own the home. And if you think about it fundamentally, how do you build wealth? Well, the one principal way of building wealth is through home ownership. Over time, your property inflation allows you to build more wealth. And if you're renting, best way in the world is down the drain. Doesn't give you any long-term value. And the other thing, which kind of surprised me was there's over 1 million diaspora in the NHS. My God, the NHS would just stop
Yeah.
and grind to a halt.
Yeah.
So it's such an interesting segment. But when you talk about our vision is bigger than that. Diaspora is really important to us, but it's much bigger. Our vision, and I think you touched on it, actually, you caught it really well, because our key mantra is serving the underserved.
Yeah.
So that's a much broader context.
Yeah.
Yes, of course, the diaspora, but we've identified other niche segments where we see provision being poor from the traditional players. Things like high net worth, where people are asset rich, being poor in terms of mortgage. It's something called modified affordability. Things like young professionals, say doctors or accountants, or where their earnings trajectory is quite steep in that early phase. They start postgraduate, and within 5 years, they may have doubled or trebled the salary. And nobody's really thinking about affordability for them and their accelerated earnings. So it's partly about a level of intellect and understanding the life cycle of customers and how they operate, and also being able to apply a more pragmatic approach to onboarding and also credit. So if you take self-employed, for example, most of the established players will want 2 or even 3 years audit accounts, filed accounts at company's house before they'll consider a mortgage. Well, our approach is different because we build our financial assessment bottom up. We don't need an Experian or an Equifax. We kind of say, okay, you've been tried in a year and you've got management accounts. That's enough. We'll start looking at that and we can analyse it. So we can serve clients that traditionally have got to wait. The diaspora having to wait at least 3 years. That was before we entered the market. typical approach for the big banks was you had to be here for 3 years. And the reason for that was then you had an Equifax or an experience score, which would go through their process. And we said, well, actually, if you've been here 6 months, we're happy to consider you because it's traditional credit underwriting. Before all the scorecards, you did an affordability assessment. You looked at people's income, you looked at people's expenditure, and you worked out affordability and worked out based on the stress or an issue, how could they cope? Is there enough contingency? And that's how we operate. We're more like a commercial lender in that respect because we bespoke to the client. So we can look at individual circumstances. It's not in a big hopper. It's either yes or no based on a scorecard. We don't operate like that. We've got a much more bespoke approach, which allows us to be more flexible and it gives a better service. So serving the underserved, we're about, in the next couple of weeks, we're about to launch into the regulated bridging market, which again, very poorly served. This is people's homes where they're in a chain break or they want to buy a house before they sell the house and various scenarios. But also the other thing I'd say, which is, I'm really, really proud of our technology platform because there's not another player out there that could get their license in July, launch in September, and in the intervening period between September and April, launch diaspora, high net worth, young professionals, self-employed, and now regulated bridging. Boy, can we move fast. We've got a fantastic tech platform.
Yeah. So could we talk a little bit about the tech platform then? Because a lot of the listeners are from, I guess, the technology savvy or from fintechs. Um, is that a specific technology, or have you set it up in a specific way? Have you been able to hire the right talent in the right locations to be able to do this? What's the secret sauce for you on your platform to be able to do the
Well,
things that you're doing?
firstly, my biggest secret sauce is a 35-year-old Colombian called Monica Pasquales, who worked with me as CTO at my previous bank and is now my CTO at this bank. And it's also incredible how many people are working with me at this bank that work with me elsewhere, because if I find somebody that's capable, I like
Yeah.
to work with them.
Yeah.
But Monica's got a brilliant team. What we've done, I don't, some people have tried it. I don't believe that you would try to build your own core. It don't make sense. And we used Mambo in the previous bank, and it was pretty successful in fairness. But this time round, we wanted an open loop. We didn't want to be constrained. We didn't want to have to keep going back and saying, we need this change and we need that change. We wanted more control. And also, we were really drawn to smart contracts, the potential in smart contracts and how flexible that could be. So actually, we're the first, and to the best of my knowledge, only neobank that has taken on Thought Machine. Thought Machine is it's Chase. Chase has got it, and it's owned by JP Morgan and Lloyd's, as massive shareholders. And it's a wonderfully capable platform. Really, really, we've had the most experience, but it is complicated. So most neos would not probably go near it. And we've been building some supplemental aspects around the servicing platform. We there's a lot of proprietary now we've built within that platform. We've got a wonderful partner, genuinely talented, based integration partner based in Bratislava, called Vacuum Labs, and we reference them because they helped Moxie, which was the Standard Chartered launch in Southeast Asia, using Thought Machine, and they've been fantastic. So I've got a brilliant team, internal team. I've got a fantastic integration partner, and I've got a really flexible, obviously you stitch a whole raft of other, if you look at our architecture, it's like Spaghetti Junction in Birmingham. But it's, the test is just how quickly I can go from concept to delivery, and none of my competitors can get anywhere close to that.
No, that's fantastic. And I think you hit on a really interesting point as well. That you've got some really, thought machines are a really great piece of technology, and I know it's making big waves with some bigger organizations as well. But it's the people as well you've just described. Technology for technology's sake isn't that helpful, right? It has to be deployed and managed. And like you say, you've got the cadence to go from concept to delivery and get a product out in the market when you can be fleet of foot, could do that. That first mover advantage is massive.
And the other thing, Matt, profoundly, the other thing is we've worked very hard with our IT team to make them business aware, to get them really understanding the business. Because what happens, of course, if you're not careful, is you've got business requirements in one silo and then the technology specification in another silo. And what we've looked to do, work really hard, is to ensure, I think my CTO understands my business model as well as the other members of the executive. And when you have that level of appreciation, you can start. She's just developed for me what I think is an absolutely brilliant origination front end. And that's all proprietary. And honestly, it is going to be such a game changer when we launch that, because our intermediate community have never seen anything like it in terms of its rich functionality. So I'm really, I just see our technology as a great competitive advantage. Um, and but everything has to start with the customer. What's the problem? How can we improve the experience? How can we give the client more? And we're not always the cheapest, and we're not trying to be the cheapest because we're a specialty finance. As you said at the start, we only serve about 20% of the market. We're never going to compete with vanilla traffic, with Nationwide and NatWest and all the other big players. And they're even forcing the smaller regionals out because of their price advantage at scale. So certainly we couldn't compete. So we fight the fights we can fight. And we work at the segments that people find are either too complicated to come up with a solution, or they're deemed too small, or whatever criterion they've applied to not serve them properly. Well, we're very happy to jump in on that because we can do it at a much smaller critical mass, and it's still economically viable.
And and that, yeah, absolutely. And back to your point about the speed to market that you have when these opportunities come up, because they will. Things are ever changing, demographics are changing. You're in a really great place to be able to go, I can take advantage of that because I can deploy a product in the market that suits that customer need pretty damn
Well,
quickly.
let me give you a real time example of how that's helping us. So obviously everybody's very sad about all the destruction in Iran and all of those problems. So, we won't touch on that. But what's it done to the mortgage market? It's severely disrupted it. And a lot of the players almost have now an absolute correlation between swap rates and their pricing. And there's very little kind of discretion because they've got different derivatives and the way their balance sheet's made up. We haven't repriced at all. We haven't increased our prices at all during this disruption. The swap rates have moved a lot. We haven't had to because we're funding our book on the back of deposits. And what that's allowed us to do is to, we always try to be in the top 5 in our chosen market. We're never going to be top generally. Because we're not a price-led player. We've got a service proposition here that we believe is better than our competitors, more responsive, more bespoke. So we don't profess to be the best, the cheapest, certainly. Probably the best, but not the cheapest. So we took a deliberate strategy not to reprice up. Now, most banks will see a margin play here. What we saw was an opportunity to penetrate the market. Relatively new player. And that's worked incredibly, really, really well. And so I'm really pleased. I'm sad about how it came about, but I'm pleased commercially how we can take it. We can take advantage of providing a better opportunity for clients, better service for intermediaries. So I'm very, very pleased. I'm pleased with our trajectory. And make no mistake, the mortgage market is so competitive, much more than commercial bank. Oh my God. When I run SME and commercial, I hadn't been in mortgages since Metro and I left there in 2015. So it's been, it was like 10 years, almost 10 years. boy, is this market competitive, and boy, do you have to work really hard to get your share of market. So I'm so proud of our team and what they've achieved. They've done so well.
That sounds like you're doing a wonderful job, and it's an exciting time at Afin for sure. Jason, I could talk to you all day. This is really great, but alas, I'm sure you've got a load of other things you need to do. Last final question that I ask all guests. So, what one piece of advice would have you given the 18-year-old Jason that would have stood him in good stead for his journey thus far?
I think don't be frightened to aspire to big things. Don't think big. And even if you fall a little bit short, you're still hopefully ahead of where you would have been. Be proactive. I think in this day and age now, emotional intelligence is more important. Think about AI, think about how that's going to impact, and think how you can really add value. Whatever situation you're in, whether you're building a business or whether you're working in an organization, think every day you walk in there, how can I add value? What can I do to enhance the effectiveness of our business, this organization, whatever it might be? And I've been lucky. My natural thinking style is definitely half full. I'm not a half empty person. And I'm always looking at all the positives and the possibilities in people. And also, along the way, you know, if you can find opportunities to authentically praise and recognize people, that's so powerful as well. There's all sorts of things, but the main one is don't be frightened of the path, work really hard, improve your competencies and capabilities, but reach for the stars.
Wonderful sage advice there, Jason. Really appreciate that. So that's a lot of what you just described there and said there is resonates with me, and I'm sure it resonate with many of the listeners as well. So that's great stuff. So yeah, I just once again thank you for coming on the podcast. It's an exciting
Pleasure.
time for
Lovely to
Afin. I
speak
think
to
you're really hitting a segment of the market which, like you say, is underserved, huge potential. And likewise, very impressed with how you've described your tech stack in terms of being able to deliver, a product in the market with a pretty swift cadence as well, which is unusual for banking. So from my perspective, working in banking, I know how long these things can take. So for you to be able to do that in short order, yeah, you're really turning the dial on that one. So for the listeners who want to know more about you or know more about Afin Bank, where do they need to go?
So our website is afinbank.com. It's very comprehensive. It covers a lot of the ground. Obviously, if anybody wants it, they can contact me through the website. Very happy, or LinkedIn, all the normal channels. We would love to engage. If people see there's an opportunity potentially to collaborate or engage in some way, we're always very open to that. We're very entrepreneurial in our approach. We want to ultimately, our core purpose is to serve customers. And if we can find partners that help us do that more effectively, we're delighted by it.
Wonderful. Thank you very much. Awesome. So if you like what you heard today, guys, hit subscribe. And remember, if you would like a free growth consultancy, drop the word grow in the DMs. We'll take it from there. And until next time, goodbye. Thank you.